Good afternoon, Vishal. How are you?
Very well, Rahul. How are you
Finally,
doing?
I could get you, the CEO of the company I work for, the founder, Property Dollar. You have been a very hard to reach person. Is it because you manage 100,000 more businesses? Just kidding.
No, not really. I think it is quite an exciting time because there are a lot of shifts happening in the market at the moment, and as a business, we got to keep on top of it. So there is a lot of changes that are happening in the property market. So that's keeping me quite busy at the moment.
Right, right. Any particular shift you're seeing? Like I'm also from a tech perspective and from a property market perspective, I'm also seeing a lot of shifts right now.
Sure.
Things like investors are moving towards the other capital cities,
Yeah.
as you would have seen, like investors going more towards Adelaide, Brisbane, Perth,
Yeah.
leaving Sydney or Melbourne as the ultimate destination for investment. What are your thoughts on that? What's happening there?
Look, it's quite a broad topic, Rahul. I think this thing can go on for a while if you want me to talk about it. But it comes down to the very basics of it. Why that's happening, one has to understand. Look, the interstate markets of Adelaide, Brisbane, and Perth have done tremendously well over the last 3 years, and some of these capital cities have achieved in excess of 50% capital growth. Now, the question is why and how the journey started. So it's not just about you got to find a growing market, and this is where I guess a lot of novice investors and novice real estate agents as well, people who have just entered the market and had a first mover luck, or you call it a beginner's luck, and they just start believing in it, get it wrong. You got to go back to the fundamentals. You don't observe the markets going up and start taking position in those markets, hoping they will continue their run. It essentially comes down to two very basic things: demand and supply. An interstate activity or interstate investment that has led to the growth of these capital cities, particularly Brisbane, Adelaide, and Perth, is driven by a lot of Sydney siders. Look, domestically, yes, the population growth did happen in these three cities. These three cities did see quite an increase in the population growth, especially during the COVID period when Melbourne was quite shut and it was not receptive to the interstate migrants. So a lot of people moved towards Brisbane, Gold Coast. Who doesn't want to go live in there? And that just churned up massive increase in population, which impacted the rental market and which sort of got people onto, while we're paying this high rent, might as well go and buy property. And Sydney siders here were feeling the heat because they couldn't afford any investment in Sydney. Sydney is already become way too expensive. So a lot of smart or clever buyers agents and real estate agents who were seeing this opportunity, they started presenting interstate product to Sydney siders, and for all the good reason, because earlier, 3 years ago, this was a beautiful opportunity. The data was stacking up, there were strong fundamentals, and a lot of sophisticated investors from Sydney decided to invest in these markets because rents were increasing, rents were high, and the prices were drastically low compared to Sydney, and that's where the journey started.
So, just to reiterate for our listeners, so the sophisticated investors actually started investing in these capital cities before they started seeing the growth trajectory.
Oh, hell yeah, absolutely. And this is what I've seen in my career of 17 years. Smart people don't invest when the markets are going up. Smart people start going to invest in these places before the markets take off. And it isn't easy. It isn't always as evident, as clear. To find those golden nuggets, you have to do the homework. You have to go and carry out the analytics or research or look at the fundamentals and then try and take positions. It is always those people who get caught out at the far end of the market that they come when there's way too much noise in there. When every week there is a seminar happening on Perth, when every other person is talking about Perth, I think it's way too late. The opportunity was 3 years ago before the market hit 42% growth. So anyone who's buying today in Brisbane or Adelaide or Perth is missing out on 40-50% growth. Yes, these markets can still grow. You have to look at the fundamentals, what will keep pushing the prices up.
Mm-hmm.
But there's always a hurdle rate for every market. And I personally believe that if you look at the last year performance for particularly Brisbane and Adelaide, they've grown less than the year before, which is already telling you the prices are softening up. On the contrary, we've seen the rental yields in Melbourne grew quite a bit, while the only other capital city that went past Melbourne was Perth. So my take is Perth's got still a little bit of steam left, maybe another 6-8 months. It'll be quite interesting to see the data coming out of Perth to see can it sustain beyond 50, 55, 52% growth? And it is sitting at around 42, then maybe another 8, 10%
So
remaining.
can I say what you're not saying is that Melbourne is following the same trajectory as a growth market, and it's probably going to be something similar as other capital cities, Perth, Brisbane, and Adelaide?
Look, it's not what I'm saying. I think anyone who's diligent enough to look at the data would agree with this, would absolutely agree with this, that Sydney has started to perform well over the last 12, 14 months. And it just didn't happen because it was mellow or it was plateau. It happened because it saw a record migration happening. It also saw the record increase in the rental market. And these things triggered, and investors started to flow in. The first home buyers were more confident in the last 6 months that the interest rates have kind of stabilized, and they said, let's bite the bullet and go out in the market. And Sydney started to come up. Melbourne hasn't. Melbourne's still below pre-COVID levels. It's a very large market. In fact, it is bigger than Brisbane and Adelaide combined, if I'm not wrong, in many ways. I should have rather said that what's driving or what should drive the Melbourne market over the next 6-8 months is massive population increase. In fact, Melbourne grew more than any other capital city in the country. And that's what I wanted to say, that it grew more than Brisbane and Adelaide combined in terms of population growth. But then again, the question is, it's not just the population growth that leads to the markets going up. We always look at very high macro level data. Just like in Melbourne, there are multiple markets. I'm sure there are like 30, 40 different kinds of markets, micro markets. Similarly, when we talk about population growth, we got to be mindful why the population is growing and what are the components. Are they overseas migrants? Are they interstate migrants? Or is it childbirth or birth rates gone up? Each component will have different bearing on the property or real estate market. I was a migrant myself, and I can sort of concur with the fact that 95% of migrants who are coming from overseas don't go out and buy property within their first 3-6 months. But they have an impact on the rental market. So which is what you're going to see. While the interstate investor or interstate migrant who's moving from Sydney because of cost of living, or Brisbane for whatever reason, to Melbourne, there's a good propensity that they might take the action and buy into a property much quicker. So you got to segment the data, look at the numbers. What's the interstate migration? What's the overseas migration? What's the childbirth? Because similarly, people who already have 2 kids, and if they get the third one, they might go out and buy a house. But people who have no kids and they have their first one might just decide to live in the same apartment, or might just go and buy an apartment or a smaller dwelling, while some people will buy houses or townhouses. So you can go into as much detail, and so layer by layer you can segment it to see how it'll impact the market. But we are extremely, I cannot emphasize enough, we are absolutely gung-ho bullish about Melbourne market in midterm. And now what I mean by midterm, the ducks are lining up for Melbourne. What happened in Brisbane, what happened in Adelaide, what happened in Perth, what happened in Sydney, you can pretty much put that into 4 key categories, or 3 to 4 categories. Population went through the roof, it started to impact the rental market, rent started to increase, followed by you started to see an increase in the buyer activity. Homeowners, not the investors first, homeowners. You started to see higher disbursements of loans month by month. And then you saw, as a result of that, a support level built up, because this was a trend reversal. Markets were going down, they had to come up, they need to build a bit of a support or a base. And that support level was usually when the markets didn't go down for 3 to 4 months. Melbourne is ripe. Melbourne is happening under our nose, and I have spoken to so many industry experts, couple of economists from very, very reputed organizations, and they've agreed. And they said, yes, a lot of people are looking elsewhere while Melbourne is happening. Record population growth, almost record increase in rental market, and there has been an increase in the buyer activity or homeowner activity. Yes, the prices haven't gone up, but that's a byproduct of all of this that's happening. It doesn't happen on the day one. All these things will culminate into property price growth. And for the last 2 months, Melbourne market hasn't had a dip, which is very, very, very strong indicator that case by case, within Melbourne, if you can find a place which is further replicating this at the next level, where population is growing, where the rents are going through the roof, and also on the supply side, which is what I haven't spoken about, Melbourne is currently at, their approvals are maybe 10 to 12 year low, all time low. And this is again an interesting thing, because when the markets are growing or they're going up, everyone wants to be a developer. Every small time guy wants to go out and build property. When the markets are mellow or they're bearish, people don't go out and start doing more investment into development. And that has sucked out a lot of supply out of Melbourne as well. And it's getting more expensive to build in Melbourne. Starting from May, we know the new energy rating rules are coming through, the cost is going to go up. So on the supply side, Melbourne is quite impacted, very low on the supply. All of the fundamentals, population growth, rent increase, buyer activity, and support building up. If you can go into Melbourne and find some areas which are next level to it, which are further seeing massive surge in the population growth, lower supply, great product, prices are still affordable, I think it's a story to be told. It's a story which is about to happen, just like the other capital cities, and one can have a good return. I'm not saying you're going to get 40-50% growth, no one can predict that, but it'll have a good 2 to 3 year run. That's what I'm sort of looking
Is
at.
that why Quarteracre is going to Melbourne? I've attended your events as well, and you're very bullish on Sydney. I always have been very bullish on apartments, and I'm sure most of your customers would have reaped those benefits by investing in those apartments. But is that why Quarteracre now is moving towards Melbourne? Is that the new beginning of a new story?
Yes, absolutely. And we're very mindful. When we look at Sydney market, we looked at the affordable sector. We knew in Sydney, large chunk of people who are adding to the population growth, they can't afford houses. And we stayed between a price point where it makes sense. It's a need-based product, and we stood within that sort of range for apartments, which is starting from 450 to anywhere around 750 mark, not those aspirational sort of purchases. And when we're going to Melbourne, we're seeing there's a price element in play. So we're not touching apartments in Melbourne. And because unlike Sydney, Melbourne's not landlocked. And we're going into more home and land space, or more about townhomes, which is more a product of choice and within the realms of the budgets that people can afford. So yes, that's why we're excited about Melbourne. We picked out areas in Southwest, which is pretty similar to the Northwest and Southwest of Sydney, which has seen massive increase in population, infrastructure, and
like Ponds in New South
exactly,
Wales.
Exactly. In fact, funny enough, you mentioned Ponds. We are actually dealing with the same developer who co-built Ponds, which is Fraser. So we are actually focusing on a couple of their master plan townships in Southwest, which is very similar to Ponds in here, which has got a business district, which has got retail, massive retail with close to over 75 shops and 3 supermarkets. You're going to have Club Membrane, or it's a place called Membrane, which is going to have club facilities. You're going to have council doing stuff.
So you are involved in creating another Ponds in Melbourne. That's pretty exciting. Now, what if someone who missed in New South Wales in buying a house in Ponds wants to buy something in Melbourne, which is probably going to be similar or hopefully bigger than Ponds? What should they do?
Well, you kind of stolen my words, because in these events we are actually sharing with people that 12 years ago, if you went and bought in Ponds in Sydney, you pretty much paid around anything between 550 to 600,000 for a 4-bedroom home, right? And at that point of time, the infrastructure in Ponds was atrocious. There were no schools, there was no shopping, there's no train, hardly anything. But it was a must.
May I add that?
Yes.
Add to that, it was home and land.
It was home and land.
It was home and land.
It was home and land, and it was a very beautifully developed, very well planned sort of suburb. And you can feel the difference when you go into a master plan community compared to if you go into a suburb where one developer is doing his 50 homes, the other one's doing 100, and the other one's doing their 150. It's just mismatched. When someone's taking the responsibility of doing large tracts of land, and I'm talking about 140, 150 acres, they do it proper. And you can feel the difference. And it's more organized, it has more parks, more facilities, sporting facilities. So it generally becomes a place for people to live, play, enjoy, and sort of, build their families.
So Melbourne is a place.
At this point of time, I will put my money on Melbourne. And again, I'm not saying all of Melbourne, places in Melbourne which are seeing substantial increase in population, and they're beneficiary of these strong fundamentals that I mentioned earlier.
Vishal,
100%.
thank you so much.
Thank you, Rahul.
See, we did it in a podcast, we covered so much.
Huh?
We did it in a podcast, we covered so much.
ठीक था